I'm Sapan Ghai. I'm Chief Commercial Officer of Sovereign Metals Limited, which is an AIM and ASX listed company. We're developing the Kasiya project in Malawi. Kasiya hosts two critical minerals, being titanium and graphite, and we are looking to get into a DFS stage with our partners Rio Tinto.
Hello, welcome to London. It's getting close, isn't it? You're getting close to the end.
Yeah, look, we brought on Rio Tinto a few months ago. We got a PFS out. What are we doing now? A lot of bulk test work, specifically on the graphite. You saw that news that came out of China. We can talk about that. And really, our chairman and CEO are down in Cape Town with the Rio Tinto team this week. And we're working away, figuring out, how do we really optimize this beast called Kasiya?
It's massive, okay? So it's not only one of the world's largest deposits of both commodities, but it's going to be cheap to get out of the ground because it's a very simple mining process.
It is really simple. Our tagline is, one project, two critical minerals, targeting net zero. What does that really mean? We're the biggest, cheapest cost to produce, lowest CO2 footprint to produce. So you can understand why, when we put that out to markets and let the world know that what we had, the likes of Rio Tinto started knocking on the door.
Yeah, okay. Look, the question I want answered from this conversation is the when. Yeah, when does this thing start producing? But before we get there, we've got to understand a few things, and maybe we'll go through a couple of steps for people new to this story, which is let's look at something you just referenced, the Chinese curb on the graphite exports to the West, effectively. What's it done? How's that played out?
So it's funny you asked me that question because I was at the Benchmark Minerals conference in LA about a week or so ago. And a lot of the US was asking the same question. As you guys are in graphite, you're one of the biggest players. What do you think about what's happened with China? And the reality is, we've seen this in the rare earth space. We've seen this in other commodities. There's talk about them doing the similar curbs on tungsten, for example. For us, as Sovereign Metals, the key thing is we don't really need to even talk about it because we'd be producing almost 250,000 tons of material. Today, or during the weekend, the UK government came out with the UK battery strategy, talking about how they'd need 135,000 tons of graphite by 2030. I mean, that's a fraction of what we'd be producing a year. So for us, and being the lowest cost, we're almost like the last man standing. And then add in the fact that we can do it all at a very cheap, very low CO2 footprint. And, it's not so much of an issue for us in terms of the curbs. It's always nice for people to think, okay, now I understand the criticality of the material. I understand that supply is an issue. Mm-hmm. But look, whether those curbs exist or not, we're going to need that graphite, and we can produce that.
Okay, so the Chinese curbs, that's fine because they're dealing with their own needs. But you feel that with projects, your project and hopefully some others, we need a lot of this stuff. We should be able to deal with the West's needs or demands. Yeah, simple as that.
Yep.
Okay,
exactly.
And for you, you're ahead of the pack because the low cost and the amount that you can actually get out there. So I want to stick with the kind of macro thematic. I do want to get into the business model in a second. So again, we're with rutile because it's one deposit to critical minerals. Rutile market is looking like what at the moment? Price is good?
Yeah, look, the prices fluctuate as they do. They most rutile ends up in the pigment space. The pigment space is very aligned to world GDP. So as long as there's growth somewhere in the world, we're okay. But what it essentially means is, last quarter, the prices were touching around $1,900 a ton. This quarter, they were close to $1,500 a ton. In our PFS, we used $1,400, so we're quite conservative in that basis. We're not using the current dynamics of rutile to basically model ourselves into oblivion, so to speak.
But okay.
Yeah, we're doing
So it's really kind of pigments in relation to titanium. I think you talk about a lot.
Yep.
Right. So, and you're saying it's it tracks like as GDP. So as long as someone's growing somewhere, the market should remain strong.
Correct. And look, so 60% into pigments, 30% into welding. So as long as we need two pieces of metal put together, as we do with cars and buildings and bridges and all the rest of it, we'll need rutile. About 10% ends up in, what we call actual titanium metal.
Right.
So,
Okay. So this is a smaller
new
portion
iPhone.
of, but I mean, what are the size of each of those markets brought down? What where do you sit in all of that?
So look, the titanium dioxide market is around $26 billion per annum. We would be the largest rutile producer. Rutile is 95% titanium dioxide. Where do we get most of our titanium dioxide feed from? It's the mineral ilmenite, which is 40 to 60%.
There's a processing component to that there, isn't there?
And that's reflected in the prices of those. So, I was talking about $1,500, $1,900 a ton for rutile, talking $200 to $300 a ton for ilmenite.
Right. And I think there's some ESG components to all of the above as well, which is part of the funding story for you.
Exactly. As humans, how do I get a 40% product to 80% or above? I either roast it or I smelt it. Lots of CO2 emissions, lots of heat, energy, etc. Whereas what we have in the ground, pick it up, it's 95% already. Right.
So natural rutile, I think you're calling it.
That's the one.
I quite like that phrase when I read that, natural rutile. Okay, so there's the kind of macro thematics that you're kind of feeding into. Let's look at the business component, because I say the question I want answered is, when's this thing get into production? When's it start cash flowing? Because I'm buying the scale, I'm buying the high margin, okay? But I want to know that it's fundable, and I want to know it's buildable, and that you've told me the markets there that there's a near timeline which I'm going to be the beneficiary of as a shareholder of this company. So if you don't mind.
Yeah, look, so what are we doing now? We're doing a bit of bulk test work on the graphite. We're optimizing the PFS and the outcomes of the PFS. What does that mean to you and I? That means we're taking the riskier areas, or so-called perceived riskier areas, and just honing in on what's the best strategy and best scope of work when it comes to doing a DFS that we need to wrap around all of these specific areas. So that will then inform us and Rio Tinto into what does that DFS look like, and then we'll probably kick that off mid-year next year. Mm-hmm. DFS usually takes 12 to 18 months, but let's try and hopefully we can speed things up, and I'm guessing if we get a DFS done by 2025, mid 2025, that should give us and it get us to FID, and from that point it's 2 years of construction.
Right, and you've obviously got a little ace in your back car in the shape of Rio there, right? Their balance sheet quite handy. One, either if they take you out, or two, if you JV it in some way, shape or form as currently constructed, that's cheaper money for you. And, the cost of money is critical on these projects. I know you've got big margins, but you always want to make more, right? So how does that kind of play out in terms of between now and FID? What are you doing with them?
So we have, just alluding to those two points, the investment agreement that we signed with Rio Tinto back in July included a clause that if we were to go ahead and try and procure funding for a construction package, that Rio Tinto would assist us with that. Hence, alluded to the balance sheet.
We're not talking about doing admin here. We're talking about putting you forward. And what does that mean? Backstopping it? Underwriting it?
Look, at this point in time, it could be any of those.
Right, okay.
The second point is that Rio Tinto has the option to be operator of the project. Now, Rio Tinto's business model is not to operate mines on behalf of juniors, so read into that what you will. But essentially, that option for them to be operator only lasts till 180 days post us putting out a DFS announcement. After that, all the rights in terms of rights to the technical committee, veto rights around around technical issues or marketing the product or any offtake, they all fall away.
Okay, so there's a very definitive endpoint there,
Exactly.
one way or t'other.
Yeah.
I know where I'll be putting my money. Okay, let's talk about some of the risks, because between now and then, there's always risks. We've
Sure.
seen it geopolitically, but we've also seen it in Africa specifically. We've seen some African states, DRC, perhaps make it harder for people to do business than we've seen. And I was with the Nigerian contingent last night, and we're talking about a specific company, and they are falling over themselves to make it easier for people. Malawi, not a lot of mining, but they, what are they like? You tell me.
Yeah, look, I joke with some people that, this time last year and earlier this year, the president of Malawi was probably marketing Kasiya more than I was. He was getting up at the UN General Assembly last year and saying, the fact that they found Kasiya, the biggest rutile deposit in the world and now second largest graphite deposit in the world, is one of those means to help Malawi become self-sufficient, right? Malawi is a poor country. Its GDP is very much based on, or a significant proportion of it comes from foreign aid. They are working towards becoming less frontier and more developed and more self-sufficient. And part of that is this three-pronged strategy that they have, where they're targeting agriculture, tourism, and mining. So it's nice that we fit into the governmental bucket of mining. And, His Excellency was over meeting Joe Biden earlier this year, and they talked about having US money and fund flow into Malawi to help bolster that. And those three specific areas as well of agriculture, tourism, and mining. So, we're seeing a lot of commitment from the government to move Kasiya forwards, to help sovereign and to help us all kind of advance this project in the right way.
Okay, so we've gone full circle. It feels very, very close.
Yeah, it's interesting times. We're getting to the point where we are truly understanding the potential of this project, right? I mean, people still don't understand or grasp the size of this project.
Remind me of the numbers. Can you remember?
So look, when I was over in the US, the first thing is just the scale of this project. So when I was in the US, I was telling people it's the size of 5 Manhattan Islands to give them a context, and that's the mineralized zone. That's not our land package, that's the mineralization.
Yeah.
Right? If we were to spend $600 million of CapEx, that would give us a nice $1.6 billion NPV. We'd be producing more rutile than anyone else. We'd be producing more graphite than anyone else. We'd be doing it at a 67% EBITDA margin.
Yeah.
Forget the NPVs, forget the IRRs, right? For 25 years, this thing would be throwing off over $400 million of EBITDA.
Cash, I understand.
After those 25 years,
I'd
still have 70% of the mineralization to go.
But the real people say, well, why do you get after it? Well, you don't want to flood the market, right? You don't want to drive the price down. It's a balance.
It's not just that. It's also, we're still a junior mining company. I can sit here and talk about a $600 million capex number because, with my banking hat on, my previous guys, I know that's financeable, that's doable for a company of our size. If I sat here and said, well, if we spent $2-3 billion on it, we could do X, Y, Z. Yeah, exactly.
Yeah. No, it is absolutely eminently financeable. And it's not necessarily, the point you're making is it's not dilutive refinancing either. You can get this thing over the line, right?
No, and importantly, as far as I know, we're the only graphite project, where graphite is actually a co-product. It's sitting with something else, with a commodity that has been financed time and time again by the banks. So for us, that's just a massive plus because, graphite isn't screen traded. It doesn't have a specific market that the bankers can figure out. There's so many variables to a graphite basket price. You really need to do a lot of DD to understand what is your long-term price for a specific project. For example, the price that we used in our PFS, we were told by one of the leading consultancy firms that we should be using something close to $3,000 a ton for our graphite. Now, given that everyone else's graphite is in their studies is priced at something like $1,400 to $1,800 a ton, it really didn't sit well with us that we would go out with such a huge price. So we actually went all the way back and became very prudent and went with $1,290, which is nowhere near what the experts are telling us what it's worth. But we know that with a prudent approach to the graphite, we know the rutile is eminently financeable, and therefore the project's eminently financeable.
Hard fun. Keep it going.